Hi, Ruchika. Can you hear?
Yeah. Hi, Vipul.
Hi. Can you hear me?
Yeah, I can hear you.
Oh, great, great. Just let me check with Akhil. Okay. So let's give them another 5 minutes. Let's start in 5 minutes.
Sure, Vipul. Vipul, can you hear me?
Yeah, I can hear you clearly.
So I hope there is no echo now because
No.
earlier we were listening some echo.
Okay, no, it's perfect now. So
Okay.
what we'll do is we'll start in 2 minutes, and once I introduce you, I'll go on mute, and you can do that. You can take it live.
Sure, sure.
Great, sounds good. Okay, so we have people joining in. Okay, we are good to go. Done. Yeah. I think we have enough people joining in now, so we'll start quickly without wasting anybody's time. Good afternoon, everyone. Thank you for joining in on this Saturday. I hope everybody is having a good time. I know it's a difficult time out there, but thank you so much for taking the time out. And I would like to thank Ruchika and Tarun, who are actually the speakers today, and they're talking on a very interesting topic, as you already are aware. The session is on a food for thought for startups, and basically what it means from an income tax and a GST perspective. The panelist Ruchika Gupta is the manager for direct tax, and Tarun Kapoor is the manager for GST at AKGVG and Associates, which is basically a global CA entity with multiple offices in India and abroad. And we're very fortunate to have them here. They come with a huge background in terms of working with larger corporates and startups. An example being Oyo Rooms, and we are very excited to hear what they have to say. because at the end of the day, as founders and as startup enthusiasts, we want to make sure that how do we save as much as we can from a GST and a tax perspective. So with that, and I'm not wasting anybody's time, I would like to introduce you to Ruchika. And right before that, I would like to quickly remind everyone that it's a simple format. We have a presentation by Ruchika. She will walk you through some of the minor details and some of the important, information that you need to understand and learn. And then we'll have a Q&A round for her, followed by Tarun's presentation and a Q&A round for her. If you do have any questions, please post it in your comment section for people who are on YouTube and for people who are on LinkedIn and Facebook. Please put it there. I will select the question from there, and then I will ask Ruchika and Tarun for the same. Right? Okay, great. So hi Ruchika, thank you for taking out the time this Saturday. I know you're very busy, but thank you so much for spending the time with us. So over to you. Ruchika, I would just like to say I can't hear you. I hope you're not on mute. No, I'm Ruchika, sorry, you're not audible. Um, do we basically is there an option like if you can check if you're on mute or not? Yeah, just one second. Let me just check with Akhil. Yeah. So, just one second. Ruchika, can you try not sharing the screen? I think we can probably hear you then. Okay. Ruchika, can you join in again? I think it might happen because of the headset being removed. So if you can just join in again, please. Hi, Nikhil. Hi, Rohit. I hope you guys are doing well. Thank you for taking out the time. Um, Ruchika, I think you'll have to rejoin in again. So you'll just have to log out and log in again. So can you do that, please? So yeah, so while we wait for Ruchika to join in again, let me tell you a little bit more about AKGVG. So they basically have been working with multiple companies and organizations in India and abroad, and what they have brought to the table is really interesting in terms of understanding the requirements of the startup, figuring out the main key areas where you can save money, and these are critical inputs because you're looking at it from a point of view of how to reduce the hassle and how to make sure that the right practices are in place from day one, because it becomes critical as an factor when you're approaching investors, when you're talking to different partners. Having clean books becomes very important, plus reduces the headache in terms of the issues that you will face. Hi Ruchika, I can hear you now. Great. Can you show your screen, please?
Vipul, can you hear me now?
Yeah, I can hear you. Great.
Great.
So, can you try sharing the screen again, please?
Yeah.
Yeah, great. So, Ruchika, thank you so much. And it's your stage. And I will not cut your time out for this one. So, if you're worried about the time limit, I'm going to make sure you get adequate time for this.
Not a problem. Not a problem, Vipul. Thank
Right. Thank you once again, Ruchika. So, you can start now. Thank you.
Okay, so by not wasting any more time, let's start with the same. So the topic, the agenda of our meeting today is food for thought for startups. So there are many things which everyone is aware of, and or might be there are corporates who are struggling to understand certain compliances, certain risks, certain litigations which are coming to, but they are not able to understand how to figure out what to do, what not to do. So these are the topics for us. So starting with income tax, first is major issues that we want to discuss. First is the budget reliefs. The reliefs which came in the budget 2020 for startups. So everyone is aware about these reliefs. First is tax on ESOPs to employees of startups. So everyone know that there is a substantial relaxation, that the taxation in the hands of employees is deferred 5 years from the end of the exercise. Sale of ESOP or SSC ceases to employee of the startup, whichever is earliest. And second, there is a tax holiday extension, which was earlier 7 years only, now has been expanded to 10 years. But no one is aware about, is there any gray area around this? Is there any problem area about this? So yes, there is one. Here it is. So you can see that the definition of startups as provided in the Income Tax Act and as per the MCA provisions is quite different. As per the provisions of the Income Tax Act, a startup to qualify as a startup and avail this benefit of tax holiday 10 years, they need to have a turnover not exceeding 100 crores in the year of deduction. However, if you talk about the MCA provisions, it states that the turnover should not exceed 100 crores in any of the first 10 years from incorporation. So what does that mean? That if a startup has exceeded its turnover in one of the years only, still they are at a loss, as they will lose their startup status, and there might be any impact from the income tax perspective as well. The income tax authorities may litigate this matter as to how, considering you are not a startup anymore, then we should give you benefit. So no one has noticed this so keenly and they have not observed it so delicately, because such kind of litigation has not come up by now, because it will take time when the startup will complete their 10 years. So accordingly, a startup may lose its status as startup if its turnover exceeds 100 crore in a year, even if its turnover is less than in a subsequent year, which is in contradiction to definition provided under the Income Tax Act. This may cause undue hardship to the startups, and accordingly, government is asked to provide a clarification and just align the definitions of the two provisions, so that there is no such kind of confusion or such kind of hardship to the startups, because that was definitely not the intent of the government. Next, if we move on to a very important and a very recent provision which has come up just around like 1st October. It has been made applicable from 1st October itself. So this provision was introduced in the budget 2020 itself. However, this has been made applicable from 1st October. So all the sales proceeds exceeding 50 lakh from a single buyer are subject to TCS at the rate of 0.1%. However, there's a slight relaxation for the COVID period for financial year 2021. So it's 0.075% for financial year 2021. And there are numerous exceptions, like as you can see, goods exported out of India, imported into India, TDS already payable. However, there are still gray areas in this. Let's check it out. What kind of gray areas are there? So as you can see at the bottom of my slide, what is the definition of goods for the purpose of TCS? It has not been defined in this section. Neither it has been defined in the Act. So where we should look for it? Should we look for Sale of Goods Act, Central Sales Tax Act, or CGST Act? All the three acts provide a different definition, and as you can see, for stock and shares, sale of goods says it's included, Central Sales Tax says it's excluded, CGST says it's included. Similarly, for money and currency also, the three acts are not in line. So obviously, this creates a lot of confusion, and everyone is confused whether we should collect TCS for these type of transactions as well. These are the main highlights which most of the entities are still looking for and thinking about. But but they are not aware about other major issues, as you can see on the screen. So whether TCS is applicable on sale of the following fixed asset, no one knows that, because there is no clarification, there is no confirmation, nothing is written in the law. However, if we go by the language of the law, fixed asset can be considered as a goods, and can be included under the TCS provision. But if we go by the language of law, the intent of law, this was never the intent, and accordingly income tax authorities should bring a clarification for the same. Similarly, for software, there are two types of software. One are downloadable, one which are not tangible, and the others are downloadable, which are like others are on the CD or some kind of package which is sold over the counter. So for such kind of goods, no one knows that whether that kind of software will also be considered as a good, and whether TCS will be applicable. So considering the areas of the gray areas, it is always advisable that one should consult and check for the applicability of the company should check for applicability of its own product every time. Similarly, for the electricity, while there is a clarification that transactions in electricity, renewable energy certificates, and energy saving certificates trading through power exchanges are excluded from the scope, still there is no such clarification, and there are multiple interpretations which has been taken. One is that electricity is not taxable, another is that electricity, if bought from the generator, the power generating companies, then TCS is applicable, and others are saying that no, it's applicable on all cases. So all such kind of confusions are there. So each kind of electricity transaction we need to analyze in depth if the amount is exceeding 50 lakh in the financial year. Now we come next to the next point is whether TCS will be applicable on professionals. So no one is aware, as the section provides a definition of seller, and the seller definition specifically does not talk about professionals. So ideally, professionals should be safe and they should be happy that no, TCS will not be applicable for us. However, you never know, because there are certain things which ideally, like electricity, fixed assets, software, they are not specifically included anywhere. However, still no one knows, because CBDT may bring in some clarification and add it to it. The next point is whether TCS is to be charged in invoice itself or via debit note. This is a very major issue, as most of the companies, what they are doing, they are just adding it to the value of the invoice without even knowing whether they are doing it correctly or not. So there are a couple of issues around it. First thing is that if you do it on the sales, then but obvious you'll be able to you will be able to track only the invoicing. But what about the advances that you are receiving even before invoices? As per the TCS law, you need to collect TCS at the time of receipt. So if you are collecting TCS at the time of receipt of advance, then for example, if we talk about the month of October, you have received some advance from one of your vendors whose turnover has exceeded 50 lakh, and now when you're receiving that, you are just ignoring it. However, as per the law, you should collect TCS on the same and deposit it latest by 7th November. But if you are but in case the invoice is raised in the month of November, and you are including TCS in your invoice, then what does that mean? That you are delaying the compliance by 2 months. There will be an interest liability of 2 months, considering you have received the advance in October, you are depositing in the month of December, considering invoices in November, raised in November, and you'll be liable to 2% interest on this. Similarly, there is impact on the purchase orders. Most of the vendors are worried and they are just revising their purchase orders, and there is no clarity on that whether there should be any impact on purchase orders or not. Because ideally what should happen is that whenever you're receiving any consideration, you should do it. So what we are advising everyone is that you should raise a debit note at the end of the month on the total receipts which are exceeding 50 lakh over the whole year. Similarly, another question is GST or freight, etc., to be included in sales value or not? While the CBTT has given a specific clarification that no GST, freight, etc., these kind of things are not to be included in the sales value. However, if we go by the website of Income Tax Department itself, there is a specific FAQ on TCS which says that GST is part and parcel of your sales consideration, and accordingly TCS needs to be levied on GST. So everyone need to be sure that we can't just blindly go by the CBDT clarification, because someday it may come back to us. It's not binding on us as an assessee. Next, how to handle TCS on sales returns. So when there is, for example, you have sold some item in October and you have deposited TCS on 7th November. However, the sales has been returned. The goods have come back and you need to repay that vendor. Then how will you be able to handle it? In that case, whether the seller, that is your company, will be allowed to get a refund of this thesis? Obviously no, you will not get any refund. But another question is whether the buyer will be able to get credit of this TCS. So basically TCS is nothing, not a new tax, it is just a credit, just like your advance tax, just like your TDS. So you should be able to claim the same in your income tax return at the end of the financial year. However, income tax authorities may litigate as to when the TCS which has been collected, there is no income on which it has been collected. So the tax authorities may litigate that no, you will not get it off any credit of this thesis. So what is the way out? The only way out is to reverse it. And in case you reverse it, considering if the sales return is in the same month and you have not deposited, it is very easy to reverse it. However, where in a case that the the transaction, the sales return flows over 1 month, in that case it would be mandatory to knocking off, to set off certain transactions. For example, in a case where no money is refunded back, in that case, for any future receipt against which you are trying to set off the advance already received, in that case that can be done. However, where there is a refund or of the advance received or of the consideration received, in that case you have to reverse it. Otherwise there is no clear guidance in the law as to how to handle this. Accordingly, based on all the kind of issues that you can see in TCS, one need to analyze each and every aspect, and everything is dependent on facts of each company. So for some companies, obviously it would be better to raise it on invoice. However, if I go by the law, it is on the receipt of consideration. So we are advising clients to implement it from the receipt side. However, there are companies who are doing it the other way around. So if you see the implication of this thesis on the seller, it is summarized in like this. So if you can see, for example, if I talk about financial year 2021, if the monthly sales say is 1 crore and the total sales during the year is 12 crore, then obviously TCS is applicable on sales starting from October. So for this example, we are just considering that sales, there is a direct correlation between sales and receipt. Just to give you an example and oversight as to what exposure we are talking about. So if we talk about financial year 2021 on a sale of 1 crore, if TCS is applicable on all such sales, if we are selling to more than 50 lakh, the TCS is minor just 100. So by looking at this number, you can see that it's just 0.075%, which is very nominal, and people might ignore it. However, if we just total it up in a year, if we don't collect the money, and then if we don't comply it within the timelines, there's a penalty applicable at the rate of 100% of the thesis. So if we see the exposure for a company with just 1 crore sales, the exposure is 91,575, as you can see over here. In percentage terms, you can see that TCS is just 0.075%. However, the interest may go up to 0.003% and penalty 0.075%. So in total, if we compile all these three elements, the element will be 0.153%. And if you go even down, there are 5 examples, as you can see, how much is the TCS liability if you have different kind of turnover. So for 50 lakh, the impact is just 5,000, which is meager. However, if you have a turnover of 10 crores, the impact is 76,000. If you have 12 crore sale, just like the example that I've mentioned above, the impact is 91,575. For 50 in a 50 crore sale, the impact is 3,81,000, and 100 crore sale, you can see 7,63,000. So this is a major tax, major leak of your revenue if you are not complying with the provision correctly. However, if we talk about financial year 21-22, the gap is even more because the rate of TCS is 0.1%, plus it will be applicable on the whole year. So if you see example 5, the last portion, the exposure may go to 20,65,000 on a 100 crore sale. That's not peanuts. We need to think over, and we need to plan it so that we are not suppressed by this liability, which is unnecessary and can be fully accomplished just by following the law. This is not all what I'm talking about. If you just see at the bottom of my slide, I've also mentioned a couple of things which are in addition to this interest and penalty. So the company, the person who is responsible for all these TCS compliances, can be prosecuted. And in addition to that, if the company is not paying off the liabilities as stated above in the Excel in the table, then there can be additional, the assessee can be considered as an assessee in default, and there would be an additional penalty at the rate of 1% per month, and penalties can vary from 0 to 100%. I would like to readdress that these three things which have been mentioned at the bottom of the slide are in addition to the pointers which I've mentioned above. Let's now move to the next slide, which is the compliances issue. So on the compliances part, everyone is aware about the faceless proceedings which have just come up. So this is a broad summary of what all kind of faceless assessments have come, what all kinds of proceedings have come, and what are the implications, what are the due dates, whether there is a notification or not. So if you see, this is just a gist of what is there. However, if we analyze the provision, here it is. So there are certain gray areas in faceless proceedings as well. So first, if we go by, there is no such scheme has been notified till date except for faceless appeals. That's a major lacuna in the whole mechanism, because everything, as you can see, is applicable from 1st November itself. So there is no delay. You need to be ready. However, when we are standing on 17th October, there's nothing which assessee can do or to make itself prepared for what is about to happen. Next, if we talk about what will be the impact of jurisdictional discipline, like binding nature of jurisdictional high court judgment on lower authorities in the same jurisdiction. So what I'm talking about is that, for example, when I'm in Delhi, so a judgment by the Delhi High Court is binding on tax authorities of everyone. So considering that there is an impact of the Delhi High Court judgment is binding on the lower authorities, then obviously the lower authorities don't argue that much. However, in case of faceless assessment, faceless proceeding, faceless appeals, no one knows who is the assessing officer, who is the appellate authority, etc. Similar kind of issues are there, as you can see, whether we will go to income tax department again for challan rectification, pan and tan surrender, tax NOCs like LO, assessments in case of search and seizure proceedings, etc. Similarly, how will be the existing forms of faceless proceeding? For example, when we are filing ITRs, everyone knows that we are getting intimations on a daily basis, and whereby somewhere the reconciliation from the 26 years is not considered by the department. So assessees are really facing hardship as they need to file rectifications going on. So these kind of problems are generally addressed when we go to the department and talk to the EO. However, that option is just forgone now just because of this faceless assessment. I think I've just lagged down on the time a bit. So let me just rush through the balance part. So who will address those rectifications?
Hi, Ruchika. Ruchika, that's okay. So you have another about 5 minutes. We have a lot of questions coming in. So
Okay.
Please do take
Sure.
time.
I'll try to rush it to another 2 to 3 minutes. Okay. Yeah. So who will address those rectifications which are forwarded by CPC to AO? Because obviously everyone is aware, even CPC is aware that in the faceless problems they were facing any problem, they were facing challenges due to which cases were to be addressed to the AO. However, that possibility is not there now because everything is faceless now. Next, whether Vivas Vishwas will also be completely faceless. That's just a wonderful question, as no one know that what and how we are going to do this. Just to brief on the VSV, does disputed tax in the VSV, everyone is known that 31st is disputed tax in relation to an appeal, includes addition on which no appeal has been filed per se. Accordingly, is cherry picking of issues allowed or not? The CBTT had provided his clarification. However, the clarification is not aligned with the other clarification provided in the same circular. This creates confusion and no one is clear as to whether how to do and what not to do. And the only way of doing is just try and see how the government is responding to them. And accordingly, the only way out is that CBDT should come out on a clarification in this regard as well. Is interest and penalty applicable on addition? So if we have filed an appeal, there are three issues. We have appeal for just one issue and two issues are not there. So will interest and penalty be levied on the other two issues? Whether the penalty proceedings will be continued for those two issues, that is very big issue and will call genuine hardship to the assessees, as the only perspective of PSV is to end litigation. However, if these things get lingered and are held at the AO level, then obviously the basic perspective of VSV is not served. And the last point in VSV is the scheme valid after 31st December 2020? What is the time limit for depositing? So after December 2020, there is still no clarification as to by when an assessee can apply for VSV. Just a last point on the due dates extension. I think that's my last part. So uh, people are confused as to what kind of due dates have been extended or not. So for financial year 1920 and 2021, these are the kind of due dates which have been extended to 31st March 2021, which is quite surprising. But yes, government had to come with this relief. But obviously, all of you would be wondering about the other due dates. So here are the other due dates which you are looking for. So this is a brief about all the due dates that everyone is looking for. And just one last line, CBTT has given a clarification that, and it has been incorporated in the Income Tax Act itself, that in the absence of an MD or directors, any other person may be able to act as the signatory to the company. However, this was to be prescribed by the CBDT, but no such prescription or confirmation has come up till date. This is always a problem area because despite of incorporating the same in the law, no relief is being provided to the assessees. That's all from my side. Vipul, you can just let me know about the queries that you're getting.
Oh wow, Ruchika, that was like a power pack session right there. I mean, there's so much of information. So I just want to remind all the participants that we will be sharing these decks. Post the event is over, you can refer to them again. Like Ruchika has presented the due dates. Please use this for your reference. They're really helpful. And with that, I would actually like to apologize to a lot of participants. I've got a lot of questions for Ruchika, but because of the paucity of time, I've picked up a few here that came in initially. You can reach out to Ruchika and Tarun after the call as well. We will share the email ID, post the session. Please feel free to reach out to them and ask, the questions that you have. So one of the earlier questions that we got was from Sandeep Pai, who's the founder at MetaCode in Kolkata. So he asked that what are my tax obligations when the startup starts generating revenue, Ruchika?
So, you are saying,
Yeah,
trying to
we
say
can hear you.
that in case when the startups, whether 30 or 40 crore as the case may be, however, from the income tax perspective, obviously there are income tax rates which are provided in the Income Tax Act for the companies, and there are tax deductions that which are there. But what I am more, what I want everyone to focus is more about the compliances. That there are tedious compliances, there are specious compliances, there are all such sort of petty compliances due to which you might get stuck in a trouble.
Hmm.
The government may issue you notices which you may not be able to handle. So these compliances which are not a kind of tax on you, but you are required to apply them, and this is not a cost to you at all. However, if you don't comply with them, it will become a big cost to you. Hope this answers your
Got it.
query,
Yeah, I think so. Would it also come?
Vipul.
I mean, yeah,
Any other
Ruchika.
query?
Yeah, oh, lots. So we have another question from Simoni, is founder of Melon Studios from Vizag. So he's asking, how do I separate my business and personal finances? I think this dives into the initial question also, because when you start generating revenue and you're getting, your salaries from that organization, so you want to make sure that they're separate.
Yeah, so all that segmentation and accounting is has to be segregated, because obviously, for example, we have a client who is using credit cards for personal as well as uh, official purposes. So in that case, also we are advising that we need to account for each and every transaction in those credit cards, and we need to see what kind of transaction is called business transaction and what kind of is personal. And if that accounting is not done in a proper manner, obviously there are income tax problems which you are going to face from day in, day out, especially at the time of assessment.
Got it. Got it. So there are structured formats that can actually help these founders make sure that it is distinct from the day one that they actually start. So really
Exactly.
important fact. Yeah, so really important fact for the early entrepreneurs and startups at the initial stage to get it right from the get go. Great, thank you, Ruchika. Another question from Arman. He's founder Olook.in. This is based out of Hyderabad.
Exactly.
So he asked, "What can I deduct in my first year of starting a business?" So I think he means,
Uh,
what is the revenue that he can deduct for personal use while he starts a business, I guess.
Sorry, I couldn't understand your question. Can you just come again? So, is he trying to say that when he's started generating some revenue, what kind of taxes are there?
Yeah. So basically, I think he wants to understand what does the deductions look like, in the first year of starting a business. I think more from a point of view of
Okay. In
when
the
you.
first year of starting a business, obviously there are not many deductions, because the deductions which are available to a startup from a tax holiday perspective is 3 years income tax exemption out of a
Mhm.
total 10 years from the year of incorporation. So you need to cherry pick which years you want to go for this exemption. And obviously, in the initial years, the revenue, the profit will not be that much. Accordingly, corporates could not go for this scheme in the early years, and they should go only later when they are sure that yes, my revenue is this much, and I can get a deduction this year, and it should not be much next year.
Got it. So the next question is a little tricky. So this comes from Dr. Anil Gupta. He's founder Smart Buildings Bangalore. So he asked that what are the penalties for not complying with tax laws?
So the penalties which vary, they are many different kind of penalties. So if I just brief you about of what we start with, whenever you're not doing any compliance, like depositing any tax or doing something like that, then there is interest penalty. So this is not penalty, this is compensatory. That, for example, you had to pay something to the government on first. If you have not paid till the end of the month, then there will be a 1 month interest of 1%. If that is still you are not complying it, then they go to the penal provision that no, you had to deposit this plus interest. You have not deposited any of these two. That means you have to pay penalty extra. And the penal provisions are generally 100% of the tax liability. So interest generally varies from 1 to 1.5% per month. Penalty generally varies from 0 to 100%, and at sometimes it may extend to 200% as well. So the exposures are huge, and accordingly, compliances are mandated. And not just interest and penalty, there are prosecution proceedings as well, which can be initiated against the person who is responsible for undertaking that compliance. So in case of startups, that can be directors, that can be promoters, and anyone and everyone else who has been made responsible for the same.
Well, that's interesting. And yeah, thank you Amit, for asking that question, and thank you Ruchika for explaining that. That's quite interesting. I have the final question for you from Vinay Dora. He's founder Catapult, again based out of Bangalore. So he's asking that what is the R&D tax incentive program? Now I also am not aware of the R&D tax incentive program. Ruchika, do you have any idea on what this would be?
No, I think, but we can check back and come back to this query later after the session.
Great, got it. Thank you so much, Ruchika. That's been really, really helpful. Viewers, again, I'm sorry that I was not able to address all the questions for Ruchika. We will share the email ID at the end of the presentation. Please do write into them and clarify your doubts. Thank you once again, Ruchika, for taking out the time. Thank you so much. And yes, Tarun. Hi, Tarun. How are you?
Hi, Vipul. I'm good.
Hi, Tarun. Thank you so much for taking out the time today. And just to quickly introduce Tarun, hi everyone. So basically, Tarun has great knowledge when it comes to the GST concepts, not only generically for startups but also specifically in terms of different industry segments. So agro, edtech, health tech. So all of you guys, if you have specific questions according to your businesses, Tarun will be the right person to answer them related to GST. So with that, Tarun, over to you. We'll follow the same procedure. Please, start off with the presentation, and I'll collect the questions for the Q&A.
Thank you so much, Vipul. Hi, everyone. Good afternoon. I'm Tarun Kapoor, extended warm greetings to one and all present in this session. The session would be an eye opener for many of us as it aims highlighting the gray areas of GST, of course. I would like to start my speech with the sentence, with the stanza of Bhagavad Gita. In the conversation between Arjun and the Lord Krishna, Arjun asked why life is all about ups and downs and full of challenges. Lord Krishna replied, if life is so simple, then even a fool can survive with so ease. He added, taking admission in a school is not enough. Giving exams and survive over is also a part of your education. So, second name of the life is test. And to survive over, we have to be wise enough. So always have a wisdom to choose a shoes of fool or a wise one. To resolve the curiosity of Arjun, Lord Krishna added, always walk on the path with the light because light will get the ability to show the stones of your path and you can overcome the obstacles. But in the dark, you might not be able to see the stones and you might stumble and fall. Why I choose this stanza from the Bhagavad Gita, let me relate. I think the word I use, test of life, mean changes of law in the daily basis. I use the word the path means doing a business. I use the word stones, stones means making a mistakes. And light means update when the latest law comes into the picture and you have to apply. On the daily basis, it is very difficult for a businessman to update with the changes of law, but yes, can do so with the help of a person who is having an eye on updates on a daily basis. In a literal sense, we can call him as a consultant. So we should not be fool instead of be wise with the help of those who can put a light on the path and save us from stumble. Basically, it talks about GST. GST is a 3-year-old baby now. This baby has seen many ups and downs, replacing 17 erstwhile laws both at a central and a state level. The learning curve of both the government and the industry has been steeped over these 3 years and that have elapsed. In fact, new legislation takes time to settle down, as will GST. There are various topics which can be seen as a debatable since the implementation of GST as one of us have their own set of interpretation. Therefore, such areas can considered to be inconclusive. Friends, and efforts has been made to bring clarity on such evocable topics and update you with the recent changes which are relevant for day-to-day working. Now, I think I should start turning to the attention towards the areas which are considered to be very crucial from the compliance point of view. For this, I divide all my observations into four parts. First is ambivalence under GST, which is in front of you. Second, new in GST, portal issues, and do and don'ts. Let me start with the ambivalence under GST. So, first ambivalence is notice pay recovery. What is the notice pay recovery is when we recover from an employee when he left the organization and he's not willing us to serve the notice period. So we recovered from him. Then it is always a debatable whether the same is comes under the ambit of GST or not. This is a debatable issue even in the erstwhile law. But now High Court judgment says that service tax regime, which were in the favor of the assessee, there are so many judgments, which is in the favor of the assessee, which says that holding of notice period recovery are not subject to service tax. In the same way, we should carry it in GST that GST is not subject to, notice pay recovery is not subject to GST. Earlier, in 1718 or 1819, we used to consider it is under the ambit of GST, as Section 7 says that to do an act or to tolerate an act is also supply. But in 2019, February 2019, government rectified itself and they said that the word Schedule 2, in which that word is written, to tolerate an act or to do an act, has been removed. Now they said first comply with the definition of supply and then comes to schedule. So to crux, they said that GST is not applicable on notice pay recovery, but that is not mentioned anywhere. So government might ask from you that if you have recovered something from your employee, then you need to pay tax on it. That is GST. Second is refund on input service and capital goods. Always a pain area for everybody. If you are involved in the inverted duty structure, that means your input is higher, you are gathering input at a higher rate and you're selling at a lower rate, that you fall under the inverted duty structure, then government said we will not give you refund of input services. On the same hand, if you are doing a zero rated supply, that means export, government will not give you the export refund of ITC on capital goods. This is a highly litigative matter. On Gujarat High Court on inverted duty structure, they said that input service shall be admissible uh, as a refund to the assessee, but still government is not intended to. So these are the highly litigatives. First, notice pay recovery, and second is refund of input services in case of inverted duty structure, and input of capital goods in case of zero rated supply. Third one is interest liability. We know that we need to pay interest if we defer the amount of GST on the stated timelines, then we have to pay if we are delaying. But government is not sure whether they want on the gross liability or the net liability. Some have contended that we have ITC of rupees 80 in already in that ECL, electronic credit ledger, and we have liability of 100 to pay. So that means ultimately we need to pay 20 rupees only. Then why would we pay on 100 rupees? Government always ask on 100 rupees, assessee always want to pay on 20 rupees. They said 80 rupees is already with you. So government on 1st 9 2020 has come up with a notification that and put a full stop on this question that now onwards you need to pay on net tax liability. But again, one gray area they left. The government has put to rest all the confusion surrounding payment of interest of net cash liability with effect from this, but they haven't clear that whether this applicable prospectively or retrospectively. That means if I have certain liability to pay after 1/9/2020, should I pay on net tax liability or on a gross one? So this is again a gray area. Fourth one is gift for dealer. There is a huge confusion, and that is a pain area of everybody, that they always want to give something to their dealers, their distributors, and when they are gifting to something, the gift is comes under the negative list of GST, and that GST means that you're not able to claim ITC on the same. But as per the businessman, this is not a gift. This is a business promotion expenditure. Until unless we are giving to the client, until unless we are making happy to our dealers or distributors, we cannot run our business successfully. So there is a huge confusion between what is the gift and what is business promotion expenditure. So there is a thin line difference. We have to see each and every time that government might come to us and say why you have taken credit of the same, because you have gifted to somebody. On the other hand, we are considering it as business promotion expense. So registered person claiming ITC in respect of goods being disposed of as gift shall be allowed only if such gifts relate to the business of the registered person. So there is a huge confusion between this, that the same is the gift to dealer or a business expenditure. There are so many things. Like, in order to save ourselves, I think we should go for litigation. We should go for the advanced ruling. I think advanced ruling is something in case of any ambiguity in relation to the transaction, whether already undertaken or proposed or to be undertaken, a person can apply for advanced ruling. If, like, let's say I, due to the paucity of time, I selected very few of the ambulance, that notice pay recovery, input and input capital goods refund, interest liability, or promotion and gift distinction. So I think we should go for the advanced ruling each and every case, because obviously considering the cost and cost analysis, so it's a very minimum amount. So if we have taken the advanced ruling from the government, then we can ascertain ourselves that we can follow these paths in spite of what is happening in the previous era, what will be happen in future, or what is written in the law. So I continue myself in new in GST. So first is e-way bill. I think government is expected that every return filed on the timely basis. Otherwise, e-way bill facility will be blocked. I think taxpayer initially Rule 138 deals with it, and this mentioned that once you have to file each and every return, once you break the chain and consecutively 2 months you have break, then we will block your e-way bill facility. In 2019, they mentioned that if you have not filed GSTR1 for consecutively 2 months or quarters, then we will block. And now they come up with, on 15 October 2020, they have come up with, if you have not filed 3B for 2 or more consecutive years, then we will block your e-way bill facility. So somewhere it clears that clear message from the government that they want you that please come to the path, please file each and every return. Please, government is assisting to enforce taxpayers for timely filing of return. Now GST 3B and both are under the clutch of e-way bill. Next point is detail of ITC on import of goods in 2A. Earlier in 2A, we can see only of those imports which are into DTA. Now, ICE gates and GST are merged. They are transferring information to each other, and bill of entry data which were at ICE gate now transmitting to 2A, and now you can see your import of goods expenditure in 2A only. So now only RCM part left into it. Now you can able to reconcile your ITC which you have taken in your books to with the 2A. I have some portal issues as well with me. This is the very basic issues I think we need to consider on each and every fortnightly basis, that the reporting of additional place of business in a registration certificate. We do take another office. Well, let's suppose there is a building, we are situated at 5th floor. So due to the area congestion, we said okay, let's take another office. So we take on the 3rd floor, but we forget that we need to add this as an additional place of business in our RC. So if a place of business is not reported in the RC, then our registered person cannot effect supplies from such place. Further, ITC of goods or services availed from that place shall also be disallowed to you. Next, amendment of registration of for new product. Earlier in the previous era, there was a distinction between who is a trader, who was manufacturer, and who was service provider. In GST, there is no service provider, no manufacturer, and everybody is a GST holder, a registered person, a taxable person. So what people do, they start business of, let's say, product X. They are manufacturing product X. Now they want to expand themselves because this is a startup and they want to expand themselves, and and they expand, they accumulate the chain further. That means they start into trading. But you have registered yourself for service for manufacturer only. For that trading, we need to amend the RC, and we have to see that whether we have covered all the businesses what we are doing, can all the but whatever we have done is we have to put in RC. So RC shall be amended time to time. By that, there must not be any lapse. Now the question arises whether all the business can be put over. No, there are only 5 columns which we can put over. So we have to see that adjustum generis law will apply on us. That means whatever we have mentioned, the other function we are doing can be in continuation, and that should not be apart. Let's suppose we are dealing in X, we cannot dealing in Y. If we are dealing in X, we can deal in X plus X plus plus, but we cannot deal in Y. Again, mobile number and email or ID authorization. This is very important because every OTP, every communication from GST department is coming through your mobile number and your email ID only. So my point to take is that every company is doing that. Somebody they appoint in their GST department or their finance department, that person or your consultant put their own number and email IDs. So you must have control over the same. Let's suppose your person in GST department is having that details of email IDs and mobile number, and now he is resigning. Now he is on notice period. Now we need to know that have we changed the same on the GST portal? Else, once he left, he will not give you OTP. He will, you will you will struggle like anything then. So I think this is one of the most important feature, that mobile number and email ID shall be in control of the company. I think I have tried to consolidate some do and don'ts. There are some reversal. There are some reversal under Section 42 of CGST Act before. What is that reversal is that the taxpayer should make final calculation before furnishing 3D for the month of September. Let's suppose you have some outward taxable liability and some exempt outward sale liability. Then you have to reverse your input tax credit according to the proportion of outward tax liability and exempt. So each and every consultant is continuously and very effectively doing that reversal in each and every month. But law says even if you are doing from April to March, then even when you're standing in September, you have to see again that whatever the total expenditures you have done on which you have taken ITC, that all has been proportionate into taxable and exempt or not. So that final, after mostly consultant forget this, and might we will get department's litigation notice that you have not reversed properly. There is a capping on ITC provision, Rule 36(4), which says that government is keeping a close eye on the ITC being availed by the taxpayer. The taxpayer should claim reverse ITC as per the calculation. So there is a gap. You cannot take more than 10% of the two. Let's suppose you have 100 rupees ITC in your book, and as per 2A, you have only 80 rupees. So you can maximum take 88 rupees because 10% of whatever is shown in 2A. So you maximum take 10% of the 2A. So please take care of this, because whatsoever reflected in 2A can be your eligible ITC, and whatever you have booked in the books, I think that has to be mapped with the 2A.
Wow,
About
that's yeah, Tarun, that's really interesting. I would have another about 5 minutes to cover this up. I have a lot of questions coming in. A lot of it's becoming difficult to pick the questions out, and I'm trying my best here, guys. But I'm trying to give opportunities for everybody to ask their questions. So once again, a quick reminder: if your questions are not answered here, we will be sharing the email ID. Please reach out on the email ID and ask questions. Sorry, Tarun, back to you.
okay. So about cancellation of registration, everybody know that cancellation of registration is very easy. We just need to put that we want to surrender our application. It's not like that. There are many checks. First, you need to know that have you taken any capital goods on that GSTN, because that capital goods need to process by you guys for 60 months. So that we need to understand that 60 months are done or not. Because if that 60 months are not completed yet, then you need to reverse whatever the ITC you have been taken on that capital goods. Then once you cancel your registration, then GSTR 10 is a mandatory thing which you need to file. And everybody, even the government's data said that 95% of the people are not filing GSTR 10, and government is continuously extended, and government is not applying any late fees or interest liability on the same, as they feel that GSTR 10 is a final return, and we all should aware as soon as possible before government mandates for outward reconciliation before September. This is the important thing. Taxpayer should pay a reconciliation because every consultant will say that please maintain an input ledger, match with your TA before September, take your all ITC, whatever you have in books. But they forgot to say that outward reconciliation is also important for you guys. If you have missed any of your reconciliation, let's suppose your book says 100 and your income and your GSTR 3P or 1 says 90, then 10 rupees you have to pay by filing GSTR 9. Then to save your interest, to save your penalty, I think you, in spite of you are doing input reconciliation very well in September, please do outward reconciliation as well because you can save your interest liability just on the precautionary measure. So this is all from my side. Most welcome. Any question is there?
Yeah.
Vipul?
So, yeah, hi Tarun. So, just a quick reminder: if you guys are looking at this sheet and you want to make sure that you can, see it in a larger this thing, please double click on the screen. It will zoom in for you guys. So, while with that, Tarun, thank you so much. I again, like I mentioned before, I have a lot of questions coming in. So, the first question is by Rajesh. He's founder IRIF, Bangalore. He wants to know what is the minimum annual revenue for registering under GST.
Okay, so when it comes to supply of services, it is 20 lakh, and when it comes to supply of goods, it is 40 lakh. Again, I want to clarify that if you are registered at any place, and let's suppose you are registered in Bangalore, and you are having a turnover of rupees, let's suppose 1 crore. Now you want to expand your business in Delhi and having a turnover of zero. Then even you want to, then you have to take the registration because at a PAN level you are at more than 20 lakhs. So at each and every time we have to see at the PAN level. So we cannot issue invoice in any state without having a proper GSTN.
Great. Follow-up question from Jendran. He's founder eClinic 247. Again, Bangalore. His question is, what exactly is an e-commerce business as per GST? Is there a classification like that under GST?
Your voice is breaking. Please.
Yeah, Tarun. So basically, I'm asking the question is, what exactly is an e-commerce business as per GST? So does GST recognize
E-commerce
certain
business.
e-commerce business? So does the GST recognize something like that? Does it have a classification like that?
E-commerce business something the Section 52 deal it with, and they said e-commerce business are business which are selling online, and they are very specific condition with them that person is selling online and person is recovering the amount with him. Then he termed as e-commerce person. Let's suppose if I want to register myself with Amazon. So, although government not mandate us to have GSTN for the same before 20 lakh, they are giving a threshold of 20 lakh. But Amazon mandate us that if you want to do a business with us, then we have to have GST before that. So, Amazon in that case is a e-commerce operator.
Got it. Got it. Very helpful. I have another question from Pranav Mishra. He's founder Lensbricks. He asks, what will happen if my businesses avail exemption and does not register under GST?
What kind of exemption?
So he's not mentioned that clearly, but I think he
Okay.
basically, I'm
Okay.
not very sure.
Okay, I think his question is that if I'm doing outward supply of exam services, and then even I have to see the 20 lakhs. So my answer is, if you are involving in the exam services, then you need not to take registration even if it is 2 crore. But let's suppose if you are doing any outward supplies which is taxable, now it is of rupees 1 lakh. Now you are standing at a turnover of 2 crore 1 lakh. That cumulatively I have to see, and that cumulative is increased by 20 lakh. Now I have to take the registration. So my answer is, if it is a turnover, then turnover has to be counted a turnover of taxable turnover and a exempt turnover. But if I'm doing only exempt turnover, then I need not to take registration.
Got it. Okay, so the next question is very interesting. I know Naman personally, so I'm not surprised that he asked this question. So he's like, Naman Agarwal, founder Laundrywala, says, "What if I am a stubborn businessman and not registered under GST?" He's an innovative person. He's great at business, great acumen. Yeah, and he's a little stubborn. So how do we resolve that problem?
Can you please repeat the question?
So he says, "What if I am a stubborn businessman and I do not register under GST?"
So I think first initially, if you are not taking the registration, then you cannot deal with the organized sector. I think this is the out of the way I can say. Each and every person who belongs to the organized sector always ask for the bill with a GST. Nobody want to take a that ITC that GST part in his P&L account. First, if I'm talking about the government, then government always have a measure to penalize you, where that you are doing the some business of some crores and you are not taking the registration, you are not issuing the invoices, so might you are into the clutch of that litigation.
Got it. So another question, we have just two more questions left. So this question is from Vidya Vela. He's founder evyadesk.com. So he says, how many returns will be required to file under GST?
In a year, 17 returns are there as per the current applicable law. Uh, if you are talking about the small taxpayer, that means who are below 1.5 CR. And the person who are above 1.5 CR, they have to file 12 3Bs, 12 GSTR 1 annual return. So it comes to 25.
45. Got it. Last question. So this is by Sandeep. He's founder Grovely.com. So he says, can service providers claim GST payment based on purchases made for the business?
Of course. Of course, that in itself a clear from the tax name, goods and service tax. So government doesn't distinguish between that goods and services. If let's suppose I'm a chartered accountant and I'm providing services, I can take the inputs of my goods. Yes, of course. Yes, there are some, there are some barriers, there are some negative lists. Let's suppose if I'm buying a car, so it is restricted for all. Being I'm a part of, supplier of goods, being I'm a part of supplier of services. So if there is a distinction, there is a barrier provided by the law, but there is no distinction that if I'm a service provider, then I can take this. If I'm service of supplier of goods, then I can take this. So there is no such distinction in the law.
Got it. Great, Tarun. Thank you so much. That was it. Again, all the participants, I'm really sorry I could not pick up all the questions because of paucity of time. But please feel free to reach out. So the email ID that the AKGVG team can share is info@akgvg.com. Is that right, Tarun?
Yes, sir.
So basically, all the other questions that the participants have, they can reach out at info@akgvg.com. Is that the email ID where they can reach out?
Yes, correct. Yes, correct. I think we should. I think anybody who's posted a question, please mention in subject GST or DT. By that, the speedy process has been taken.
Got it. Got it. Great. So we are out of time. Tarun, thank you so much. Thank you so much, Ruchika, for taking out the time on a Saturday. I know it's a busy day and you've traveled all the way to the office. So thank you so much for that. Again, there's so many questions. I'm sorry I was not able to pick all of them, but please feel free to reach out. We will be sharing the deck post a call as well with all the participants. And thank you so much, Tarun. Thank you so much, Ruchika. And thank you to AKGVG and Associates. Thank you. Thank you so much, everyone. And have a good weekend ahead. Thank you.
Thank you, Vipul. Same
Thank
to
you.
you.
Thank you.
Bye bye.
Thank you. Bye. बंदुआ